All right, let's go ahead and get this started. My name is Joe Pivarunas. I'm the founder and managing editor of Nanalyze. We're a boutique media and research firm that covers disruptive tech for a large audience of global institutional and retail investors. Now, we don't try to tell people what stocks they ought to buy or sell. We try to make them better investors. So today we're going to talk about a company called Spire stock. This was the title that you see here of an article we did about 3 months ago on Spire, and the title is "What the fuck is happening to Spire?" Now, this is a bit of a clickbait title. We've previously said that while we used to do a lot of cussing in our content, that we phased that out because it doesn't necessarily add value to the conversation. So this is more of a clickbait title than anything. And what we're referring to is the slow and slippery slide of Spire stock. So in that piece about 3 months ago, shares were trading about $7 a share. They had recently dipped quite significantly. And here were a couple quips from that piece, which is probably a good read before you watch this presentation. We had said that if Spire was valued the same as Tesla, that's using our simple valuation ratio. And what that does is it takes market cap and divides it by annualized revenues. To get annualized revenues, just take last quarter and multiply it by 4. Then you're going to get a number. And at the time we wrote the piece on Spire, that simple valuation ratio was around 28. And we had simply said that Tesla at that time had a simple valuation ratio of 16, and there was no reason why Spire couldn't trade at those same valuations. And that would put it around $4 a share instead of 7. We said before backing up the truck that if you were going to consider going long Spire, you'd probably want to do that very slowly over time because shares could trade a lot lower. And indeed, today we see shares are trading about $2.70 a share, 77 cents a share, actually. And this chart shows how the SPAC evolved. So initially, it was priced at $10 a share, as all SPACs are, and it's now trading down 72% from that point. And then over the past 3 months, shares have lost about 60% of their value. So if you've been accumulating the stock slowly, that would have been a lot better than trying to time the market and figure out where the bottom was because it continues to slide. So why is Spire stock sliding so much? Now, what we're attributing such movements to is usually manipulation. And there is an example we could give on the bullish side. So if you recall, Desktop Metal was a company that traded, had their SPAC, and then traded up well over twice the price of the SPAC. So recall it was up in the lower 20s, and we were holding a position at that time. It was one of a few SPACs that we've dabbled in, and we recovered a majority of our cost basis when that happened. It was a 30-day bullish run, and it had doubled its price. Now, this is very important to think about. In the world of finance, there's something called the efficient market hypothesis. And that says that all available information about a stock is priced in. And when you don't have information, or say information suddenly becomes available, the stock price can move very quickly. We see this around earnings surprises. We see this in the biotech industry, and it creates a lot of volatility. So that's when information becomes made available. Now, what happens when the stock price moves consistently in a particular direction and no new information is provided? Well, that's when you start to suspect that there's some manipulation, and that happens on the bullish side. So on the bullish side, you may consider a stock that appreciates 100% in a week to be subject to hype as opposed to new information being made available. Same thing on the bearish side. So as a stock continues to slide, if there's no new information, it's probably just because it's being manipulated. Now, this was a title below here on this slide you see from Wall Street Journal about how after early investors are leaving these SPAC deals, day traders are rushing in and trading these stocks, and it's resulting in a lot of short-term price movements that are very sharp. So when we look at the performance of stocks, we don't care what happens in the short term. We do if we want to buy shares cheaper, of course, but we only invest in a stock because we believe it has a long-term potential that merits holding it. So short-term price movements mean very little. They represent paper losses and paper gains. So when we're looking at stocks like Spire and we see a lot of manipulation happening, that's a red flag. Now, there's new firms out there. I use the term firms loosely. There's some websites like FinTwit, and what that does is it has these gentlemen that have Twitter followers, and they put out the tea leaves, and They're ranked by how many rats they can bring in with their playing their flutes, and they then make calls about stocks, and some of that becomes a self-fulfilling prophecy when you have a large audience of people and you can start to direct and things like that. So this is just typical stock price manipulation. Now the problem becomes when that starts to create a lot of noise and you don't know how much of the share price decline in Spire is a result of genuine concerns from institutional investors like BlackRock, who actually led the pipe and parked a whole bunch of money in Spire, and what they may be doing with their shares in response to this price movement. Think of your BlackRock, if you were in charge of putting together some of these investments on these pipes, and you have to explain to your boss why this investment's down 72%. Did you completely overpay? Is that what the problem was? Did the company suddenly, you're uncovering some skeletons in the closet? That's the other thing as well. You need to think about when SPACs haven't completed yet, they're only now finding out where all the dead bodies are buried when they try to put together the financials and do a proper 10K or a 10Q. So Spire's movements, you can go on Twitter and see that a lot of this is due to manipulation. Now, the problem with people that think they can trade their way to a different zip code is that it's absolutely impossible. And it's really an amateur move to think that you're going to become a successful day trader. There used to be a day when you could join an investment bank and be a successful prop trader. That's changed, and that's because trading is becoming increasingly sophisticated. Prop desks at Morgan Stanley have now been replaced by rooms of programmers in emerging markets. The PhD in computer science and math is now replacing the MBA. And what you have are, one of the reasons for that is because everything is leaning towards algos now. So you look at hedge funds like Renaissance, probably the most successful hedge fund of all time. Their medallion fund had a track record, a 20-year track record of 71.8% annual return from 94 to 2014 every year. That's absolutely incredible. Now that fund is only available to people that work at Renaissance or people that used to work at Renaissance, but when you look at Zach on Twitter, who's trying to tell Joe Retail Investor about how he's going to be a prop trader by reading the tea leaves, this is what they're competing against. And that whole meme stock group of individuals that think they're sticking it to the man, that's anything but. So these people will be in for a real shock when they realize that they're not going to be able to trade their way towards anything. And what that does create is a lot of volatility. Now, just to be completely fair about our own disclosures, now we have initially thought Spire was a very attractive investment in terms of being a SaaS company, a space SaaS company, and it looked promising. We had picked up some shares early on in the SPAC, and then we sold those, and there was a couple reasons for that. One is that we preferred Planet over Spire. Now, people were quick to point out that you're kind of comparing apples to oranges. That may be the case, but from our perspective, we're not, and we'll talk about that in a second. And then the other reason that we sold Planet or Spire was because the SPAC deal wasn't done, and we now have some rules in place. One of those is don't buy until a deal is done because deals can fall through and you can lose money. And the second is don't buy until they've filed their first proper SEC filing document. And that's because we want to make sure they've uncovered all the dead bodies before we get involved. So that's another rule that we've added on. Now, when we talk about Planet versus Spire, and we had said, well, we're selling Spire because we would rather hold Planet. They may be two very different companies, and they certainly are. You could say that Planet is doing imagery and Spire is doing measurements of sorts for weather and sensors and whatnot, and they're doing two different things, selling to two different customer bases. That's perfectly fine. But from our perspective, we only have a certain number of slots in our portfolio, and we want to, when we look at Earth observation, we want to pick a Earth observation company and make an investment there. When we look at Planet and Spire, both of these are space backs. They're both software as a service companies. They're both observing the planet and selling insights, and they're collecting data from satellites. So they have a lot of similarities. And in the world of testing, we call that an equivalence class. So having either of these companies gives you similar exposure in respect to how they're making their money. So that's just a little bit of an elaboration on why we're presently long Planet in a small position, and we're not long Spire, and we wouldn't consider buying Spire at any level. And there's a number of reasons for that we'll get into. But when we look at what information has actually been made available about Spire since that SPAC was announced, and one of the things that happened was 4 months after they said they were going to have 54 million in 2021, they revised that guidance lower to 40 million between 40 and 42 million. That's quite the revised guidance, and they said that was relating to contracts that had some delays. They weren't closing some large contracts, and some third-party launch providers had some problems. And in short, things that were out of their control. And then based on that, we should expect a pretty strong first half of 2022. So that's fair enough, but it certainly doesn't seem like it justifies the dramatic drop in share price of the company. Now, when we look at valuation, remember when we had first written that article, the valuation was around, the ratio was around 28. Well, we do the math today. We've used a market cap of 385 from Yahoo Finance. If you go calculate their market cap manually, it's about 400 million, but it's generally the same number. You get about 10. Now, Planet Labs, we did a recent piece on, they have a valuation ratio of 11. So both these companies are trading at a similar valuation, at least compared to the measure that we use. So you would certainly say that Spire isn't overvalued, but Spire could also fall more. Now, what we're waiting for the next time we want to look at this company would be when they file their 10K, similar to Planet. We're waiting for their 10K. And in that 10K, we'll be able to find any new insights. And one metric we're really interested in is customer concentration risk, at least for Planet. We want to see what that looks like for 2022, their fiscal 2022. And this is what it looks like for the first 9 months of 2021 for Spire, and it's not looking good. So you have about 57% of the company's revenues coming from 3 customers. That's pretty high. Now, it certainly is lower than what it used to be. That's what you'd expect over time as they bring on new customers, but that's quite high and that's quite concerning. Now, in looking at the rest of their SaaS metrics, everything else looks fine, but that's definitely something that we'd want to keep an eye on. Now, just talking about size, Spire is a very small company. Planet is small, Spire is very small. We have a rule that says we don't invest in companies with a market cap of $1 billion or less. And that's just a cutoff. There's no exceptions to that rule. Now, it's a different story if a company grows and then it hits $1 billion, then it comes down a bit, and then it there's a what we call a one-touch rule that says once it's reached $1 billion market cap, then it comes on our radar. Now, for Spire to have fallen so dramatically and to be such a small company, we certainly wouldn't want to dabble in companies that small. That's mainly because we broke our portfolio down into these different buckets. And these are the target percentage weights we're trying to have. So as risk-averse investors, we want to lean towards having in our portfolio larger companies. And right now we're overweight more on small than we'd like to be. So Spire is not a company that we would consider at any price. We're looking at Planet as a potential way to play this space, but we cover Spire because what's happening is quite interesting, and there's an interest from investors in that. So when we look at the sort of stocks that we want to invest in, this is what they look like. This is a chart for Johnson & Johnson, a very slow and boring stock we've held for a long time that has paid a dividend for a very long time, that increases every year for a very long time. And these are the sort of companies that we like to hold, and they're really boring, and we like boring. So Spire, there's lots of excitement around Spire right now and all the price action, but it's a stock that has become very risky. SPACs as a rule are risky. Space backs are much riskier. And you just need to realize that stocks like this, doesn't matter how low they sink, they can always go lower. And the smaller a company gets, the more riskier it becomes. So we'll be keeping an eye on what Spire releases for their 10K, how the first half of the year turns out for them. But it's a stock that we've been avoiding since we sold it and will continue to avoid. So you can read in the description of this video the articles associated with Spire. Make sure that you sign up to the channel. We'll be putting out some more videos. Probably the next one will be on AST Space Mobile, or maybe some of the other pieces that we're working on. We'll see. But thanks for taking the time to watch this, and make sure that you sign up to our YouTube channel. Thanks.